Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Now, welcome to the COB. I'm Sue Lannon for the close of this trading day on Tuesday the 28th of October. Firstly, let's have a look at the markets. Now, the CBO 200 ended lower. The local market did lose ground today despite more record highs on Wall Street. Gold miners were hurt by a lower gold price. CSL and rare earth miners among the stocks that weighed on the market. And the ASX 200 also at the close down 0.4% to 9,019. A lot of sectors in the red, very much healthcare taking a hit on the market. Rare earth miners, as I mentioned, going down. In fact, about 6 sectors fell, as 6 out of 11 sectors fell. Let's have a look at some of the themes for today. Now, we did see a raid on WiseTech, the tech firm, more trouble after the office was raided by ASIC and the AFP. Now, they searched the Sydney office looking for documents that's relating to alleged trading by the founder Richard Wise and 3 employees in late 2024 and early 2025. Fed cut. Now, all eyes are on the US Federal Reserve. It's expected to cut interest rates by 25 basis points on Wednesday, looking at a federal funds rate of 3.75 to 4%, and it's getting closer to Australia's 3.6% rate. We had a hawkish speech overnight by the Reserve Bank Governor Michelle Bullock. They'll certainly be watching tomorrow's inflation figures that come out for the September quarter. Michelle Bullock says if the CPI for September quarter rises by 0.9%, that would be a material miss to the RBA's forecast. And Domino's bid, or maybe not. Now, we did see Domino shares surge on a report of a buyout by Bain Capital, but then Domino's came out and said it doesn't know anything about it. Let's have a look at the sectors of the day. Now, as I mentioned, health stocks took a hit. That's because CSL plunged to a near 7-year low, so it's delayed its planned spin-off of its vaccine division and downgraded its outlook. So it lost about 15%. Cochlear actually held up. Ramsay Health went down, but CSL very much dragging the sector lower overall. Let's have a look at gold stocks, and they also lost ground. That's because gold actually fell below $4,000 an ounce. That's on optimism about a US-China trade deal. The US president set to meet the Chinese president this week in South Korea. Northern Star down 3%. Evolution Mining also lost ground. Newmont also. Ramulus Resources and Genesis Minerals also taking a hit. Now, one of the sectors that limited the losses on the stock market today were banks. They gained ground. ANZ up 1%. National Australia Bank up 2.5%. Commonwealth Bank rose nearly 1%. Westpac up 1%. And Macquarie put on 0.6%. Let's have a look at some of the top corporate stories. As we've been mentioning, CSL expects a further decline in US influenza vaccination rates over the 2026 financial year. It downgraded its growth forecasts amid falling US vaccination rates, and the AGM was going on today, and in fact more than 40% of votes cast were against its executive pay plans. That's in fact a second strike, so investors not happy with CSL's high executive pay. Domino's surged as much as 23% before a trading halt. Now, as we mentioned, he denied a media report of a takeover offer from Bain. Domino's Pizza says it's not aware of any offer to buy the firm made by Bain Capital. And Liontown Resources saw concentrate sales fall by 20% compared to the previous quarter. Meanwhile, 2 people have died at a mine owned by Polymetals. It went into a trading halt and its shares dropped as much as 14%. Now, WiseTech, as we mentioned, had its Sydney office raided by ASIC and the AFP, and AUB Group hit a record high on a takeover offer. Now, Henry Jennings from Marcus Today joins us to discuss all the market action. Henry, thank you for being there. And so we saw another hit for the rare earths miners. The optimism came and went.
Yeah, hi Sue, thanks for having me on. Yes, the rare earth miners, I think, basically they got very, very carried away on the proviso, I guess, that we were going to see the Chinese export slowdowns, delays, bans, whatever you want to call it, continue. But of course, now we've got Donald Trump and President Xi meeting on Thursday to announce some sort of framework agreement. All that froth, all that hot air is coming out of the market. Also, what's interesting, I guess, is that Arafura is launching another capital raise. It wasn't that long ago that they had one. So that is interesting, taking again some of that froth out of the market. I think, though, Sue, at the end of the day, you know, the West has had the wake-up call in terms of the Chinese dominance to rare earths, and that's not going to go away. Even if we do get a handshake agreement, some sort of détente between the Americans and the Chinese, that imperative to diversify the supply chain away from Chinese dominance is still going to be there. So, you know, once we've blown the froth off, once we've got the speculative money out of the system in the rare earth space, I think there's going to be some value there for long-term players. Of course, the key is always processing as opposed to production, but it's an interesting space at the moment, I have to say, that's for sure.
Well, do you think all this government money, both from Australia and the US, flowing into the sector is justified?
I don't know if it's justified, but it's certainly, you know, it's going to be helpful for the sector. It's certainly, you know, the supply chain is the big issue. 80-90% of supply comes out of China. So, you know, you can't be held ransom with a gun to your head every time some little thing pops up on the trade front between the US and China. So this is going to be an ongoing story to replace the dominance of China with either Australia or American rare earths or wherever it comes from, as long as it's not Myanmar or China. So it's going to be years of this sort of story going on. The Chinese have spent decades building up their dominance in rare earths, and you know, it's not going to be over in 2 days, or you know, one way or the other. It's not going to be solved necessarily by the US or the Australian governments. It's going to be solved by private enterprise with prices that are sufficiently high to justify the investment and demand sufficiently robust to justify that investment as well. But they will find a level. Where that level is at the moment, it looks a little bit spongy, to say the least.
Well, let's turn to the US, and Federal Reserve expected to make a rate cut this week.
Yeah, very much so. 25 basis points on the cards. I guess the issue is going to be what happens from here, and whether the US economy is actually slowing enough to justify another rate cut before Christmas. Certainly, you get the sense that consumer spending, consumer sentiment is a little bit soft, and certainly in those lower socio-economic classes, they are feeling the pinch, I guess, a lot more than maybe the higher end. And we saw that with American Express. Platinum spending was good, whereas consumer sentiment generally is bad. Auto loans as well, very high increase in defaults there on auto loans. So it's going to be interesting, but I think 25 basis points is a done deal, and then possibly another one before Christmas. And then, you know, to be honest, by the time we've got through January, Jerome Powell is looking down the barrel of an exit in May. So things do start to get interesting come next year.
Well, let's have a look at CSL now, very much weighing on the market. We just heard that it got a big protest vote at its AGM, and it cut its profit outlook.
It did. I mean, CSL, not being on the CSL side, is almost un-Australian, but this stock has really turned into an absolute dog. 15% down today. Second strike. I'm surprised only 40% voted against the remuneration package, because, to be honest, the board has fluffed this big time. They got a big kick in the teeth when they announced the demerger of Seqirus initially a couple of months ago, and that came as a bit of a shock. And now we've gone back on that, and that demerger has been put back. The vaccine story in the US was always going to be an issue. The company tried to bluff their way through that in previous announcements, but I think the fox in the hen house and the chickens have come home to roost in terms of the vaccine drop-off in the US, which is clearly having a bit of an impact, and they have downgraded guidance, and you know, it's 15% down today, and it's hard to see what's going to stop and arrest the slippery slide at the moment in CSL. A lot of people rusted onto this story, but it has really underperformed, underwhelmed, and underdelivered on so many fronts, and I'm surprised only 40% voted against remuneration strategy. And the problem with these votes is that no one really suffers at the end, because by the time it gets to a board spill, which we didn't have today, you know, the board's probably moved on anyway, and they've certainly trousered a hell of a lot more money as well. So Yeah, it's hard to see good news in this one at all.
Well, do you think the spin-off should go ahead? It's saying that it will consider it when the market conditions improve.
I don't know how the market conditions are going to improve, to be honest, Sue. You know, the administration is going to be in place for 3 years, unless Robert Kennedy Jr. Is replaced by someone pro-vaccines. I don't think this is going to be a particularly optimistic outlook for CSL in the US, I have to say. I think the market was surprised, taken aback by the demerger. It should have been softened up, and now we flip-flop back the other way. You know, it just adds to a chaotic kind of management that we've got at the moment. It smells of panic, to be honest, and that's never a good thing for a company like CSL.
Well, let's turn to Domino's now, one of the stocks of the day. So a meteoric rise on a media report that wasn't confirmed. And even in the media report, they said that Bain Capital had refused to comment. So
Yeah.
do you think there is a takeover bid in place? Because, of course, Domino's have denied it and they said no one's even approached them.
I would think if you're looking at targets for private equity, there are probably better targets than Domino's, to be quite honest. You know, it's had an almighty share of troubles. They've still got troubles in Japan. They've still got problems in France. They've got problems just generally, and the whole premise of Domino's was always the technology stack, the delivery of it, the price point, I guess, to some extent. And now you've got Uber Eats, you've got all the other delivery services where you can get your favorite pizza. Okay, it's going to maybe cost you a little bit more, but you can get a far better product from your favorite shop as opposed to Domino's. And I think that goes to the core of the problem that they've had. I'm doubtful whether private equity is really that interested. It may be a shot across the bows. Certainly there's a big short position in this one, so it's still up 7.2% as we've closed. So clearly there's a few shorts that have been happy to cover just in case. But if you're looking across the market for fallen angels, there are plenty of choices out there for private equity to target. I don't think Domino's would be top of my list, but you never know, Sue. You never know in this market at the moment.
All right. And where do you see the ASX going? We did see more record highs overnight on Wall Street. But of course, oil and gold falling brought the market down today, along with those other big stocks.
Well, yeah, I mean, the gold sector is not a massive part of our market in terms of the index. The biggest part, of course, is the banks, BHP, Rio, Fortescue, that part of it, and CSL, of course. So CSL and WiseTech would account for a large part of the fall today on the index. Similarly, the banks would account for a large part of the gain to counter that on the index. You know, I think we're still muddling around at these kind of high levels. We're really waiting for this week. This is a crucial week in the US. We've got the tech results, we've got the Fed, we've got China on Thursday with the US trade deal, and then we've got Friday, we've got PCE core inflation numbers. So there is a lot going on. This week is probably make or break for global markets. If everything falls into place, we could see the markets run up till Christmas. That will drag the Australian market up as well, although it probably won't perform as highly because we don't have that tech exposure. And the tech exposure we have got is the likes of WiseTech, which has really tested investors' confidence today, as it has in the past. So I think sideways at the moment is probably the best that we can hope for the ASX, and sectors taking it in turns to perform. Bank results soon as well, so that's interesting. We'll see what that brings in early November. So there is a lot going on, Sue, but I think this week is crucial. And if we don't get the pieces falling into place, then we could see our market come off relatively quite a lot, I guess.
Okay, Henry Jennings from Marcus Today. Thank you so much for joining us.
Thanks, Sue.
And of course, the stock of the day was CSL, with Michael Wayne and from Medallion Financial and Francesco Destrados from Ord Minnett.
You know, your dividend yield is less than 1%, it's less than 2%. So you're not in there to boost your income in your portfolio. You're in there to extract a bit of growth, which, as you can see from that chart, has been going in the opposite direction for probably the last 12 months or 18 months. Look, the reason for the fall today was they had their AGM. They've cut guidance, NPAT is now expected to grow at between 4 and 7%. It was at 7 to 10%. Revenue growth at 2 to 3%, was at 4 to 5%. And that's mainly due to weaker flu vaccination rates, particularly in the US.
CSL is not going to grow its dividends by much over the next couple of years, given the slowdown in their growth rates. But if they are able to ramp up their growth again and recapture their position as a market darling, then perhaps it is one to consider within an income portfolio as being a healthcare stock. Healthcare stocks don't pay dividends, not much dividends historically, because they reinvest that into future growth and doing clinical trials, etc. So you'll never really find a healthcare company paying much of an income.
And let's have a look at the big performers on the market today. Firstly, looking at the leaders, you heard about that supposed takeover bid that wasn't for Domino's, so it ended up 7%, but it did of course go into a trading halt. Got a speeding rule from the ASX. AUB was higher on a takeover bid. Also going up was Eagers Automotive, Steadfast and Fisher and Paykel. Looking at the laggards now, CSL took a big hit on that profit downgrade, down 15%. WiseTech Global lower also on the raid of its offices, down nearly 15%. Lynas Rare Earths down 14%. Liontown Resources on a cut in sales over the September quarter, lost ground, and so did Greatland Gold, one of the gold stocks hit by the lower gold price. Let's have a look at the small cap leaders now. Grange Resources up 13%, Fluence up 10% and Hazer up 9%. Looking at the losers in the small caps, Horizon lost 21% of its value, Iconic Rare Earths fell 17.5%, Astron lost ground, and Australian Vanadium lost 16%. Let's have a look now on what's on overnight. The US Conference Board Consumer Confidence Index for October is out. And looking at tomorrow, we've got the all-important CPI for the September quarter. Analysts are predicting it could lift by 0.8% for the September quarter. And looking at some of the AGMs that are out, Ansell, Dexus, SiteMinder and Nick Scali. We also will have quarterly reports from Boss Energy and Woolworths. Let's have a quick look at how the market ended. So the CBO 200 down 0.4%, the ASX 200 down 0.5%, and 6 out of 11 sectors rose. But as we've mentioned, healthcare stocks, mining and oil stocks, as well as tech stocks, helped drag the market down. And that's all from me. Join us again tomorrow. Have a good evening.